and welcome to Price Action GPS. I'm the Market Surfer here with your morning report for August 28th, 2023. Here's our Bitcoin. And the chart's looking like it's kind of a little slope to the downside. We have some support right there. The momentum itself, it may stop there, pause, but momentum looks like it has rolled over. But if we get some support on that, we can get a third shoulder over here. So that's the head. We have one shoulder. We need another shoulder here. Bounce off this bottom, get up to resistance, and then maybe fail. We'll have to see where that support comes in after that. Today's Monday, and I think we have some earnings today. Here's the earnings report. Tomorrow we have more earnings coming out. Best Buy, Big Lots. That'll have to go with consumer spending. Malibu boats. Neo. You'll see nothing there that's really exciting. Salesforce is Wednesday. And today's economic calendar is nothing. So today's market could get wacky. There's nothing really holding them back from trading. Plus we had Jackson Hole, Wyoming last week. And the fallout of that will be happening this week. Now if we get back to the charts. I keep reiterating this. Bitcoin, here's our dollar. Dollar is pretty on a nice little run. I don't know if we tag that, then sell off, but a dollar is probably going to get a little weak. Not for a long term, for short term to find support again. And here's the daily dollar yen. I want to compared this little bottom to the Bitcoin bottom. How it held, took up, and so if it's going to hang in there like the yen, we can get up to 48,000. But the difference is the 600 period moving average is above the price action, and I think is basically it's suppressing its price from rising. I think that's a lot of pressure to the downside. Same thing with that. But the difference is with the 30-year, we have the price action high up here, the 600 periods down here. I expect the 30-year to drop to about 2.8%. But if that happens, that could be the bottom. This one or this down here. And then we spring for higher interest rates for the next 10 years. And I know that sounds crazy. But if the government's going to need funding, and they're not going to get it from foreign sources, they're going to bring my opinion, they're going to bring manufacturing back home. They're going to drill, and all those jobs will create a good economy. Not to mention demographically, we have a lot of workers there for the workforce if we have the actual real jobs for them. And I think they will turn to going back to the 40s and the 50s, getting the American citizen to buy these bonds and the T-bonds. So if they offer that, I think banks are going to go away over the next 5 years. And if the only way that you can save your money is putting in T-bonds and things of that nature, I think they'll tokenize all of this. It'll make it very simple. I think that's where we're going. They're going to tokenize all of the asset classes for the bonds, and American people will buy it, and that will fund the new, I wouldn't call it the New Deal, but whatever new economic system we built the infrastructure for and we're about to enter in, I think that's how it's going to play out. So I'm going to probably trade interest rates. Well, it's not that it's about the volatility. It's the opportunity there. If this is the bottom, we have a long swing trade to the upside. How do you not take advantage of that? So I'll keep going through the charts, but that's my lesson, and I'm going to continue to preach that until I see something else. because the whole economy is falling apart, and I don't obviously trust anything when it comes to what to invest in. So I just trade, or I exploit the action of the market, the price action. Here's SDS. This is broken. The same little pattern we were talking about, Wyckoff wise, on the SB, ZB. I mean, see how we're having that pattern. It's inverse on those, but the SDS, which is the inverse of the S&P 500. That's what this is. So this is about to get up to 62. Here's our divergence. And in the Wyckoff pattern, this will be the spring. So we're going to spring out of this probably up to the $60. So it looks like the S&P is about to experience some problems. Amazon's still holding there. I wouldn't be surprised if it got to 146, but I think that might be it for now. Get a sell-off and some support down here. Pound here. Same thing. I mean, it could get a spike there. So I wouldn't mind buying. But realistically, I think we're going down that area. So I would keep my stops tight. Starbucks is starting to roll over. PayPal. Think same thing with PayPal. I don't know when, but although the pattern looks good right now, it's at support. First level of support. We're at the second. If that holds, try to ride that up to there. We're actually closing that gap. So I still think they're going to come out with some kind of token for PayPal. Generac. Apple, if anything, it closes the gap, and then we have a massive sell-off after that. HBI, it got to there. It's kind of rolling over, but we're under the moving average on the RSI. I wouldn't want to chance this. So, I mean, I'm kind of in down here. I'm probably going to just take my profit if it rolls out under that. All right, everybody. Today's probably just going to be short. We just need to wait for and the bottom line is, you say what you want. China and Japan started selling their T-bills here because that's what pushed the price down. Going back to what I said last week, this is how money works. When there's less dollars in the system, people will sell their T-bond futures or sell their T-bonds early prior to maturity, and it brings the price down, which makes interest rates go up. So the Fed and the Treasury know this is how money works. So when people start selling it pushes this down, it pushes interest rates up. So they can cut interest rates all they want. If this continues to sell off, interest rates will continue to go up. That's the most important thing we have to remember. And the more default in credit that happens, the stronger the dollar gets. So I think they're keeping the dollar strong for our own sake, because you can't have inflation and a weak dollar together, because that would be hyperinflation. All right, everybody. With that being said, this is a value for value endeavor. If you are finding value in this and you enjoy what you're listening to and watching, please give us a thumbs up wherever you're watching. If you're watching this on No Agenda Tube, give us a boostergram. Leave us a message. Tell us what we're doing right and what we're doing wrong. If you're watching this on any other platform, let us know. Give us a thumbs up, a subscribe. Eventually, when we do real serious lessons about trading and price action, it will be on a value for value network, Podverse, or CurioCaster. So you might want to consider getting a modern podcast app at podcastapps.com. And like I said, CurioCaster and Podverse work great for video. So once again, everyone, thank you. Have a wonderful day, and stay safe and effective.